All right, weekly outlook. New week, new month, and week 5 of the 0 to 1 million funding challenge. So great that everyone is showing up again. Let's go over Forex Factory first. Then we'll go over the watch list, and we have some crazy movements over the weekend. It has to do with the tariffs and the news from the USA. So we have a lot to cover. So let's quickly dive in. Today, for this week in general, first week of the month, NFP week, and every single day we have a red folder in a New York session for the USD. So Monday, ISM, Tuesday, we have JOLTS, Wednesday, ADP non-farm. We have unemployment claims on Thursday, and of course NFP on Friday. So lots of volatility. That means in the indices, the US indices, NASDAQ, ES/IM, but also the USD pairs, there's a lot of opportunity, of course also risk, but I'm going to guide you through how to play that. Also NZD news. NZD is very boring for the past couple of weeks, so it would be nice to get some form of movement there. Then we have the NZD bank holiday after that on Wednesday. We have GBP rates coming out, and we have some cat red folders. So of course the majority of the news is going to be USD. So let's dive into what we saw at the open. The time of the recording is around 7 a.m. EST on Monday. So this is the current weekly candle with a massive gap. And I treat gaps the same as fair value gaps. Just like volume imbalances. If you're not sure what those are, go to the YouTube channel, 2024 Mentorship. There's a whole playlist with like 50 videos where you can watch exactly, among other things, what a gap is and how you can play that. So for the USD news, I was longing the DXY, shorting the USD pairs last week because on the lower time frame, it was the obvious play that the DXY wanted to go higher. We trade off to the weekly bullish order block, and on the lower time frame, we create very clear structure to the upside. But now we have this massive gap where we need to wait for, basically. So what I will do, I have still my bullish bias towards the highs. So when price comes into here, I'll drop to the lower time frame to find a potential entry long towards the highs. And most brokers or most platforms do not allow DXY trading, so just vice versa on USD pairs. So long DXY means short USD pairs. So very excited for that. So low hanging fruit is going to be January high. It's going to be the first target, and let's see what the week brings. Then JPY basket. I was shorting all the JPY pairs because the structure was there, and also JPY, boom, upwards. So we took some nice JPY trades last week, and I think with the rates being so high in Japan, the interest rates, I think we can still go up and up and up. So next up is a new high. So this swing high is going to be next up. Let's see in a month what we have. Not much, but we have some bullish, very bullish structure being created. Also other low hanging fruit target will be here. So I'm gonna stick with the order flow. So that means I'm going to look for longs towards these areas. We already rebalanced very nice here during Monday. So today's London session in this 4-hour bearish bullish value gap. It could be that it already be the low of the week. It will be insane. But let's wait for the market to give us a little more information on that. But bullish JPY means shorting all the USD, shorting all the JPY crosses. So bullish for JPY. Then AUD NCD. Let's see who's stronger. Kind of similar. Euro GBP, very interesting. Euro is very weak against the pound. So if you want to short something, for example, if you want to short the USD pairs, if you choose between Euro US dollar or GBP US dollar, short the weakest currency. So Euro is weaker against the pound. So make sure if you want to short the Euro. If you want to long the GBP. Then the indices, well, it's absolutely crazy. Last week I was shorting the whole week, took some losses because I thought these lows were too clean, and yes, they were. Not in, so I took losses here, part of the game. But I am still interested in shorts this week. just like on the DXY, massive opening gap. So at the 9:30 bell today, when the market opens, I want to see some form of move into here, and I'm open to short towards the January lows. Same for ES. Also same for YMs. So short-term bearish. I'm waiting for a little more retracement higher, and it needs to be clear structure formed. So I'm not the person who's going to blindly short, for example, right here. I don't do that. It's a 650 currently, so 6 AM candles currently printed. A little higher around New York time, make a nice little retracement candle, and then we're good to go. Same for YM. YM is nice. It has some retracements because it went up so aggressively. So yeah, short-term bearish, like follow the order flow here. I think we will go up again. So February, in general, February sets a low of the year or a significant low of the quarter in these couple weeks. So I'm gonna short, but on some point when a structure turns bullish and I'm aiming for like a 15-minute or 1-hour structure turns bullish, I'm definitely open to also take some swing positions towards the highs. Cool. Then the German index. Well, you'll see during the review of week 4, I took shorts in this price action because, yeah, of course, we want to go lower. Also took losses. So last week was another very nice week. But you guys want to know the bias. Also shorts. Shorts from a retracement. Short term. So during today's live stream, we have open Zoom on 9 AM EST. Link will be in the school and in the Telegram. If you're not in the Telegram, I'll leave the link somewhere around this video. Next up, not only today, but also Tuesday and Thursday London session. So today New York, Tuesday and Thursday London session. We will just watch this together live. Let's see where in this gap the structure will form to the downside on all the pairs. Then Euro US dollar. Nice. I should delete this, but the structure is so nice. Short-term bearish together with bullish DXY. So I want this I want to see on DXY. So first lower than higher. That means on Euro US dollar, I want to see a retracement. And then going to a clear drawn liquidity. What is that? That is the daily bullish fair value gap that's resting here. So let me zoom in a little bit. Here you see this fair value gap. And we left that behind on January 13th. So we're very close, but we left liquidity there. So that's going to be the obvious draw. So Euro US dollar is one of my favorites for this week to short towards the daily bullish fair value gap. And that is together with DXY going to the high right here. So top pick, Euro US dollar. But we need the retracement. We need some form of retracement. GU, same. Remember what I said with Euro GBP? If you want to short the weakest currency, and currently the euro is weaker than the pound. So if I were to choose between Euro US dollar and GU, I would short Euro US dollar and leave euro. I leave GU for what it is. But also here, very nice structure, very clean, 4-hour value gap displacement. All the arrays, premium arrays are respected, which is good if you want to short, of course. So all the bearish value gaps are respected. So that's for USD pairs. Then the AUD pairs. I don't like it too much here on the Euro AUD. I'm not too sure. GBP AUD could line up for long soon. This is my lowest probability play. They are on the list, but I have low expectations from them. I want to see we can use this weekly bullish for value gap as also an inversion for value gap next week, so that we can do this perhaps. But on the daily, we already have some nice fair value we trended into. That's on the daily. Then drop to the hourly. We have from that daily fair value, we have displacement. And now we retrace into this kind of the range. So this could already give some long opportunity short term. That's why it's on the list. Not my favorite, but that's the reason I have already some of this on the list. So keep that in mind. Then the CAD pairs. With the tariffs of Trump, the Canadian dollar is getting weaker. So that means weaker CAT means higher CAT crosses. So I'm bullish. And last week, during the weekly outlook, if you've seen this, I had this on my radar. Potential weight this week for potentially a bullish for value gap being created. That was right here. We didn't tap into it, but on the daily, very clean here. On Tuesday, low of the week before going higher. So the buy structure is definitely there. So if you look at that, we tapped here in that daily bullish for value gap, and now we are in a 4-hour bullish for value gap. Let's see if there's maybe a low being created. Aggressive sells, aggressive buys to go higher. Low expectations early in the week, but I think we potentially can go higher from there. I hope to see also some sell structure because these are very low resistance lows. And it means when price comes down, it's going to come down very quickly. So honestly, I hope to see some shorts soon on the CAT pairs, but I'm going to be patient because the short-term structure is of course very bullish. But this is not very clean, not very clean. So I will be catching these lows somewhere this year. So timestamp this, I will catch them. Cool, EuroCAT, same. Potential weight it was last week. So let's remove that. I want to do weight last week for potentially weekly bullish for value gap, and this looks nice. So this could be a draw on liquidity. So potentially, if we want to go lower from here, short term, this could be a nice intraday short opportunity towards the weekly bullish for value gap. So keep it in mind as well. Point of interest can be places where we can trade from, or of course, just trade towards. And it's up to you if you know that there's a higher time frame draw on liquidity, let's say a weekly bullish for value gap, then it's up to you to insert your lower time frame entry model, your favorite, doesn't matter. Can be my models, can be whoever's models, your own model, ICT models, to short towards that. Cool. Then the JPY crosses. Well, obviously, with JPY being so bullish, it was last week's trades. Very bullish. Sorry, very bearish. We have, if we remove this for now, a little cleaner. Retracement towards here will be very nice on the Euro JPY. And they're just going to continue to take out all the lows there. So I will be shorting from here if price allows that. GP JPY also took a trade last week. I was live with you guys on the London streams where I laid this out. Also, these lows, they're going to be tackled. Don't worry. Don't worry about that. They will come. So these lows, so the January 17 lows, also the December lows are also up for grabs on the JPY pairs. So shorts, and same for all the JPY pairs. So I'm not going to go over all of them, but if you do your analysis based on a sell structure, and a sell structure means you have premium arrays. Premium arrays are bearish for value gaps, bearish order blocks, bearish breakers, market maker sell model, all the premium arrays from the IC concepts, they hold here on the JPY structure. Just like on the JPY basket, that's the currency of the JPY. You see that all the discount arrays are holding. The bullish for value gap, the bullish order blocks, bullish breakers. So shorts JPY. So currently, so far, shorts on the indices, shorts on the USD pairs, and shorts on the JPY pairs is the bias for these asset classes. AUD and CAD, I think, are lower probability. So I'm going to focus my attention mostly on the indices, USD pairs, and JPY pairs. And also, I want to look at gold with you guys. Gold has been the star player for the past couple of weeks. Like the whole challenge, like the majority of the funding in the 0 to 1 million challenge has been gold. And why was that? There was not some magic. That was on the monthly time frames. Every candle is 1 month. We had a monthly bullish fair value gap. Here's IRL to ERL. IRL means internal range liquidity, so it's a fair value gap. External range liquidity, ERL, is a old high or low, in this case a high. But we completed that right now. So this monthly internal to external fair value gap to high is completed. Meaning, I'm going to reevaluate what we're now going to do on gold. In this move, I took many winning trades. It was very easy. On the monthly time frame, we have a drawn liquidity. That's where you need to pay attention. So currently, today, time of recording, we have a nice rejection from this bullish value gap. Then we drop to a lower time frame. So we could see longs again, but I guess we will see somewhere in the near future a break of structure forming here. And there will be a new driver probably who's going to do that. But when you completed a very bullish structure, a bullish move, I'm waiting. Like we are basically premium of the range, or we're creating a new range. We're back at all-time high, and all-time high trading in general, I have more trouble with because there's not a clear high to short from. And do you want this deep into premium? Do you want to long there? So that's where on gold, it's on my list. I'm gonna take a look at it, but I'm gonna probably be trading later in the week. And then finally, Bitcoin. Many billions are lost here. And I want to point your attention to the following. And this is the same what I outlined last week, and it could play out very nice. Let me pull up both Ethereum and Bitcoin, correlated assets. If you know what an SMT is, so this is a weekly, not sure what the two bullish value gaps here. Currently, the low of January, this one, has been taken by Ethereum, but it has not been taken by Bitcoin. That's called an SMT. When now the structure turns bullish, the SMT will be confirmed and probably having a low. I think it's a bull run year in crypto, so I think it could be a low of the year. Low of the year probably will be printed somewhere in the coming weeks, just like with NASDAQ. I'm very, very confident on that. So let's see if the SMT holds or we're gonna go lower. So on the lower time frame, I'm just waiting for structure here to form. So we want to see green candles coming in like this, or we of course can still go lower one more time, but there needs to be some form of buy structure coming in. But that these lows were about to be taken was very obvious. I stated that last week as well. Because the IST concepts work on crypto as well, definitely because it's liquidity, there's institutional money. And if there are higher time frame value gaps left open, like for example here, this one, the January low, very obvious. Same with NASDAQ currently. These lows, the January lows, easy liquidity. So I'm definitely going to be shorting towards that. So I want to conclude with that. So exciting week. DXY, the dollar is doing crazy stuff with the Trump tariffs. So fundamental news as well. NFP week coming in. So very excited to have you all during this weekly outlook, but also during the live trading on Monday, New York, Tuesday and Thursday. We have London trading. And on top of that, 0 to 1 million challenge, week 5. Let's see if I can get some accounts out of drawdown from last week. And of course, make sure you tune in for a 2025 mentorship. New video this week online as well. Goes over your trader identity. Scalper, day trader, swing trader. It's going to be released on Wednesday. So thanks for watching, and I hope to see you on the streams, and good luck today. Good luck with the week, and talk to you later. Bye-bye.